Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. The stock market has done well over the first 5 months of the year, but if you want to continue to take advantage of whatever upside is left, you need to focus on a potential expansion to the rally. In a nutshell, this means focusing on quality companies that are potentially trading at a discount or sectors that have more upside potential than others. The next few episodes will be focused on exactly that. The first company I want to talk about is Middleby Corporation, ticker symbol MIDD. This company is a global leader in commercial and industrial food processing equipment, but since most people never see the inside of a commercial kitchen, these guys aren't exactly a household name. Their customers, however, are definitely the names you know. Middleby does business with 97 of the top 100 chain restaurants. Some of their top clients include McDonald's, Domino's, Starbucks, KFC, and Papa John's. Commercial markets make up more than 50% of their revenue. A large part of their revenue also comes from the residential side, as they are the owners of Viking, Rangemaster, and Marvel. The rest of their revenue comes from industrial food processing businesses. Now, what piqued my interest about the company? They happen to be on one heck of a path to long-term expansion through dozens of acquisitions. Some of their latest acquisitions include Terry Water Treatment Solutions, Tradewinds Manufacturing, and Masterbuilt, which is a leading manufacturer of outdoor grills. This year, earnings are projected to see little growth, but next year they're projected to grow earnings by 10.4%, and over the next 5 years, they're projected to grow earnings by 8.2% on average. Even though the Rule of 40 was designed for software companies, I like to use it in all industries to gauge operating performance. Middleby scores a 27.4, which is a great score for a company in the industrial space. Their free cash flow margin of 15.3% is exceptional, as it's higher than their profit margin of 9.8%, showing that the company has quality earnings. The one dark spot in my analysis is that Middleby does generate a less than average return on invested capital in comparison to the other buy-rated companies in the Equity Channel's index. Morningstar does not have an analysis written on the company, so I won't be able to do the bull and bear segment that I wished I could do, but according to Jefferson Financial and Forward Equity Research, Middleby poses a low valuation risk to investor portfolios and ranked above 73% of companies in terms of operating yield. The company's financial position also looks really good. They have a lot of working capital, and interest coverage on their debt is through the roof. To talk about what the stock is actually worth, I believe they're worth more like $140 per share. This suggests the company has about 12% upside to that target price. With the fundamentals flashing low-risk signals, I think this price provides more than enough of a margin of safety, and believe there's a chance the stock will exceed my targets in the long run. Potential risk within the industry includes the shutting down of restaurants across many franchises. Front page news in the culinary space as of late is the bankruptcy of Red Lobster. These types of events could deliver a blow to Middleby's business and see the stock hit lower prices. For investors who think there's a greater chance Middleby won't see any growth next year due to an economic slowdown, $110 per share should reflect that outcome a whole lot better. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.